Hello, hello, hello. Happy Monday, December 18th, 1 week before Christmas. How's everyone doing? Good morning, Patrick. Good morning, Royal Palms. Good morning, George. You think there's going to be a soft landing, huh? We had a meet. They didn't schedule the meeting with me, Sterling. Come on. I'm glad it's fine, Sterling. You're not expected to put the news in. Period. You're just doing it as a wonderful benefit to this channel, so we always appreciate it when you do. Thank you. I hope the meeting went well. How is the auto industry going into the end of the year? And how are you weathering the storms down in North Carolina? So I know the Carolinas got pretty hammered with high winds and rain. All right. Who else? There's some people hiding in the backgrounds, but it's a lighter viewership this morning. Maybe some people will trickle in. We're in the holiday season now. So that's where we sit. Uh, how's the trading volume expected to be this week? I think it'll be pretty decent this week still. We've got some major stuff coming out at the end of the week still, and just the way the holidays fall. And interesting enough, so today, not much going on. Tomorrow, not much. You got housing starts, Red Book. Wednesday, consumer confidence, existing home sales, and the crude numbers. But Thursday, you got the final numbers for the GDP for Q3. We again have jobless claims with the Philadelphia Fed Manufacturing Index. We have the PCE, prices related to the GDP quarter. Okay, those are the PCE numbers, Ben. Then we have the Consumer Board Leading Index. So Thursday's pretty heavy on news stuff, and Friday is real. You got, again, this is the last trading day before Christmas, which is a full trading day. Christmas Eve being on the Sunday and closed for Christmas on Monday. But core PCE numbers, all the PCE numbers, and consumer sentiment final numbers with inflation expectations for December. So Friday morning has a lot of data. So I'm actually expecting trading to be pretty good even through Friday, and then next week is a significant drop off. A lot of the vacation will be next week. So that's what I'm expecting. Let's see. Car business okay and has been very wet. I imagine I saw some pictures out of there. It looked very like a lot of flooding all around the Carolinas. Good morning, Richard. Good morning, Anissa. Options 22 in London, our world traveler. I need some souvenirs, Options 22. You're everywhere. Well, thank you for taking the time to tune in. So remember, things are backloaded this week. Sort of a mixed map this morning. Some up, some down with the mega caps. The big thing is oil, with the Red Sea and a lot of shipping lanes being now rerouted around Africa instead of through the Red Sea Strait area. So that's going to be very interesting. But oil popping up on that after last week's percent beat buy. And we'll look at oil. Did not close below that weekly 200 again. So, wow. You are. When do you get back to the States again, Options 22? You're everywhere. Good morning, Jacob. Wow. I'm getting tired with Options 22's schedule of travel. Energy leading it, then basic material and healthcare. So sort of a more defensive rotation besides energy, but a more defensive rotation this morning in the stocks, technology, a little pullback. Fed watch tool, still pause in January and 1, 2, 3, 4, 5, 6. 6 cuts priced in for next year. We had Goolsby speaking earlier today also. I'm not going to start on the Fed people this morning. They're all over the place. But we finally back to extreme greed mode. Extreme greed with cycles at the top, weekly cycles at the top, and daily cycles rolling over. So again, watching for at least a short-term top to put in, but we have to have at least some confirming breakdown in price action. All right. And everything is just insanely overvalued. We haven't gone over this recently. The value index even from, though it'll be updated at the end of a couple weeks from now, but everything is overvalued. Everything, it even was at the end of November. In terms of earnings, very quiet week, but we have FedEx after the close on Tuesday. General Mills on the open Wednesday, which is, I'm going to be interested in that from inflationary and passing stuff on to the consumer. Micron after the close on Wednesday. Nike after the close on Thursday. So that's where we sit. Speaking of cars, CarMax before the open on Thursday. But that's about it for earnings. Nothing. I mean, the semis will probably react to Microns, and the market could have a minor reaction to FedEx if it's based off the holiday shipping stuff and what they're saying, because they'll give some guidance on that. So we should see that, but that could be just a minor reaction. All right. December 22nd. Well, I wish you safe travels. Good morning, Tony. All right, so let's see. In the S&P, the good old S&P futures, we used to have a double, a potential double. It's now turned into a horizontal channel. Okay, roughly if we do start breaking down below this 4750 area, I mean, I'm looking for support 4750, 4755. If that breaks down, remember we don't have there. This is the Fed meeting, rock and roll. Everything's hunky-dory, soft landing. Let's cut all the rates move. So this is a clear path move. So you start breaking down for this. You don't have a lot of support until back to 4708, 4700. So keep that in mind. But so far, it's a sideways correction on the 4 hours, with 4 hours also getting to the top. And you see daily cycles getting to the top and starting to roll over, but no pullback yet. So far, a sideways correction. Keep in mind that about 47.25 would be my first target before that 47.08 area. Now, if we break out, because this is so far sideways correction, so we break out above what's the high here? This 47.91.75 area. Very key is 48.07 area. 48.06, 48.07, then 48.22. So those will be my upside targets. We're still insanely overbought. As I already went through the cycles at the top, I can't even do a longer term levels just yet because we don't even have a pausing bar. So this is 1, 2, 3, 4, 5, 6, 7 weeks up. And you see overbought on the weekly with cycles pinned to the top. So that's why. And even a reconnection, if we do start this, and there's no sign yet unless we start breaking down for that horizontal channel, but if we do start breaking down more in earnest, the major support level is 4,600. 4,600 to about 4,630 at this point, which would reconnect it with the weekly rotation zone. But the only thing so far is if it breaks down from a horizontal channel. I'm always reliable wherever I am. 6:05 a.m. PST every time. You're in my 25 minutes of business news every day. Who needs CNBC? We don't give a lot of business news. I just give my thoughts on the market, but I appreciate you tuning in. Isn't it lower probability that the markets break down end of the year? Why would anybody sell now and pay taxes when they don't have to sell? And again, we might see a minor pullback. But if there's shocking news, this is incredibly overbought and things have levered up. That's why. I mean, even a pullback to 4,700 isn't major. Now, remember, the futures don't reflect the whole market because they can be unwinding stuff. They can be taking profits. Okay? So I'm not talking, and shorter term trades, it depends on the capital gain situations for longer term holdings, or if you're going to sell some things at losses that have not recovered, or take some profits to offset other losses. It depends on everybody's tax situation. But that's why there's not just a rule of thumb. I don't expect the heaviest selling, but I am prepared, especially with stuff still really heating up overseas. It could get interesting, but we got to watch the price action. That's why I'm watching for any breakdown. NASDAQ, still technically, this is still a technical double top, needs a close below 16,628. That's the only bearish thing, and that could only be for a potential pullback into the rotation zone, and it's still lower probability because you see where the rising rotations, if I zoom in, the rotation zone could come to connect. So it could even roll down here, connect with the rotation zone, never trigger this. It could confirm it, but never trigger it, and bounce again. That's the only thing, and this is a 4-hour setup, not even a daily setup. All right? And you see there, that's not even a pullback to the last major breakout level, potentially. So that's the only bearish setup that could be invalidated even today. You start trading above this 16,950 area, it will be off the table. So, minor target 16,915 if we break above the highs from last week, from last Wednesday, which are about 16,884 area. 16,915, 16,947, 16,950. And then the major target, should it rock to the upside for some reason, 17,000 to 17,030. That's where that sits. But also, daily 4-hour cycles getting to the top, daily cycles at the top trying to roll over and insanely overbought. Remember, you can still correct stuff with a sideways correction, and even to reconnect with the weekly 200 is back at about 16,200 and above the prior breakout zone. So that's where that stands. The Dow, look how far away this is from the weekly rotation zone. This has been on a massive tear. Remember, Dow all-time highs coming in. Is there any topping sign in sight? It's got waning momentum. Again, this is a upward sloping. Well, why did I do that? Why did I do that? Well, I'll move it up here. Okay. This is a sort of a upward sloping triangle pattern. We all know how I feel about this, but I can't really get bearish until below 37,500. 37,500 is where I'll start watching into potentially into that clear path move from the Fed. You see here. Other than that, break above 37,785 area, 37,851 is the next target. That's where that sits. And then above that, the next major target is 38,881. Russell technically also still has a triggered 4-hour double top. Triggered, but not made any headway. Let's look at the invalidation point, because that's what's most important right now. The invalidation point would be a 4-hour close above 2028 or a 4-hour trade through 2033.8 invalidates it. Other than that, the targets are 1980, 1971, and 1962. And that would possibly take it back to the daily rotation zone. Has not been able to sustain. It got a 1-day close above this prior high area, but we did not get a 1-day close above the highs from August of last year. Got a highs above February and August of 22. We got a highs close above August 23 and February 23, but has not been able to sustain anything. I'm really watching it close to that 50 area for a more significant resistance here. But if it does break out, especially if above 2022, and we invalidate the double, I'm watching for a quick trip to 2050 to 2062. VIX, slight little pop just because of options expiration. That's due to the options expiration roll. Remember, we had the quad witching on Friday, but not much of more of a pin price action there. I'm going to see how it reacts below this 12.50 35 area if we come find that for support. The DAX trying to pull back after a topping bar on Friday, but very key support at 16,780 to 16,800. This is technically, with the contract roll in the DAX, still a double top, but would need a close below 16,672. And that's on a 4-hour basis. The notes, sideways channel. I'm watching the bottom of the 4-hour rotation zone. That would take us into the clear path Fed move. But that's the very key support action I'm watching is 112.03. About 112 to 112.03. We start breaking 112, turning bearish in the short term on the notes with daily cycles at the top and weekly cycles at the top and overbought. The 10-year, watching for a bottoming formation here. This is now it confirmed but never triggered the double. So now it's really starting to break. I'll be watching if we do break above about 395 to get to about 398 potentially. Oh. Let's see if everything. Ooh, we just had a power surge. Let's make sure. Sorry, I'm just making sure everything's still working. Let me know if anything got disrupted. So, it's good morning, Legion. Good morning, Richard. What does minoxidil do? I don't know what that does off the top of my head. Crude. We're going to get to crude in 1 second. It is technically not a daily double. Let's see if we can get the plug. We're giving it to Ukraine. There we go. All right. Yield curve still going to be seeing if it steepens much, but it's still caught in this range down here. Dollar index. We had a little mini double last week, but a little bounce. Anything I'm watching for a more significant bottoming pattern potentially coming in, but nothing yet. Crude, this is too far extended. Is very too far extended for a double. We had the percent B buy on Thursday with the break of the high, then the follow through, and now the follow through here. My next major target is 74.86. When I'm talking about, remember, we've talked about that too. I talked about that in the podcast too, and last week. Watching to see if it closed below that weekly 200. Remember, all the reactions to the weekly 200. Closing above it next week. And then above 74.86, 75.40 is very key. If this keeps rallying, I'm watching for a connection with the weekly rotation zone and then somewhat of a reaction to set up more of a potential bottoming formation. All right, but those are the targets with a little more potential follow-through on crude. Gold, still not much. Percent B buy that triggered last Wednesday. We talked about that last week. Still watching for a move up, but nothing there. The yen, still technically the double bottom, but watching to see how this reacts at about 143.80. Nothing fantastic there. This looks like, I don't know, is that, I'd have to really blow that up. What is, I'll have to look at that later. Possibly a percent B. I don't know if that qualifies or not. Euro, not much. Still, any rally, major resistance is about 110. Pound, pulling back. Yesterday dropping below, Friday dropping below key support. So if we continue to pull back 125.90 to 126, resistance still at 127.30. Not a lot of great setups in the currencies right now, being very patient with that. Spiders, gap up this morning. 469.33 was the close on Friday. Gap up to 470.89. So any rollover play would be to the gap fill of that 469.33. Going to be seeing, though, how this, if we do form a potential double top in the spiders. Nothing yet. Nothing yet. Key levels that I'll be watching for is if it gets back above 472.15, because that takes it into potential double top territory. So I'd actually be using these as targets. 471.37 for the 62.5, then 472.15, then 472.94 would be the exact targets I would utilize. If we break above 473.73, 476.28 is the next target area higher. If we break below the close, then I'd be watching Friday's low area from option expiration 467.50 area. The Qs can't even get a real strong pullback bar. It was just a 4-hour, but the Qs technically have a 4-hour double top. Would need a close on a 4-hour basis below 434 cents. Okay? Slight gap down, very slight, 404.89 versus 404.98, which might be invalidated even in the next 5 minutes. Other than that, to the upside, it's very strong resistance, 406.30 to about 406.50, then 407.10, and then 408.71 to 409.26 is major, major resistance. So the only thing that's really bearish is if it closes below that 434. And those targets would be 397.36, 395.87, 394.38. That's where that sits. Tesla, still 257.26 is the key level, and then 269.96, so 270. Support still at 232.50. NVIDIA finally closing above the 62.5, which was the level I was watching on Friday. Still seeing if it reconnects. 498.29 is the magnet price for that. But this is now, at least on this other side, a potential double. Even if we get up to here, it could be a potential double on the daily. So we'll keep an eye on that. It's not there yet. Hey, Christoph. Christoph, you're turning in later every day now. Rogaine. No, okay. No, I've had my head shaved. Besides a brief stint where I had hair back in 94, very brief stint, I've had my head shaved since roughly, oh boy, since I've been a teenager. Not asking for, but how would a professional trader handle a situation where they were holding 40 calls in X with the sell announcement and the stock gapping up to 49? With what expiration? Because that's what's looking. X is going into the buyout. Remember, it's got that bid from the Japanese steel firm. So I would be. I don't know what the translation price will be, but it's probably right around 50. So it might not get a lot of movement unless they fall through. So I'd be taking a lot of it off personally. I'd be taking profits personally. Just double check what the projected buyout price is, because if it's gapping to 49, it'll probably be right around 50. And if that's accepted, you're going to get it pinned right around 50 if it's going to go through. So there's not going to be a ton. The risk is to the back to the downside. Just double check, because I saw that headline go by this morning, but that's the way I look at it. I want to know the price that it's going to be, that the deal could close at, because that's the risk. Then if it goes to that really close to that price, the risk is then that something would fall apart or the deal would get rejected and that it could backtrace. So personally, I would not want to sit and have any time decay, because what upside do you have? You just have the call volumes losing time decay. and you're not going to have that much upside. That's how I would handle it. Okay? Is there another topping pattern? There's other topping patterns. I look at waning momentum. I watch at Bollinger Band reversal patterns, which I might get into a little more when we do the percent B. I watch if we don't get to the double and then we break down below a key support level, with the rotation zone catching up into a clear path move, I'll watch for short setups like this. Like if Bitcoin starts breaking below 40,500, could be a quick back trace. All right, and what else do we have here? Plug. And then I got to run. Thank you, everybody, for tuning in, as always. What happened to plug? P-L-U-G. Plug. Huh. There we go. Plug as a trigger daily double bottom. The third target will take it back to the gap. Trigger daily double bottom. Yep. 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 The third target takes it back to the gap fill. So. Yeah, that's completely valid. All right. You're welcome, Richard. So that's where that sits. Let's peek at the open. Market's just opened. Where do we sit? Again, for the bullish case, this is really nice resistance shelves. 47.83. We start breaking above that. First target 47.88. Then the highs from Thursday. So that's looking at the open right now. I will talk to everybody tomorrow. Have a wonderful trading day. Bye for now.